Welcome back. You're tuned in to Chartbusters on CNBC TV 18. Now, Kajaria Ceramics, that's the stock on our radar. On the back of a strong set of numbers that they delivered in the third quarter, it was driven by strong volume growth of around 16%. We are working with a number of around 12%. What's the outlook going ahead? Can they better that volume number? And in fact, what's the margin outlook as well? We have Mr. Ashok Kajaria, the CMD of the company, who joins us. Hi, Mr. Kajaria. Good morning. Thanks so much for joining in. Well, sir, let's start off with the volumes. It looked very, very encouraging. Last quarter, you've delivered a volume number of around 16%, compares with around 12%. And for the first 9 months, it's at around 12%. What's the outlook from here? Can quarter 4 be even better?
If you go back at the end of the second quarter, we said that in the second half we will do 14 to 15% volume growth, and we are going to maintain that. Third quarter we did about 16%, and I think we should be about 14 to 15% in the fourth quarter. And talking about next year, we are also looking at the scenario where Kajaria should do about 14 to 15% volume growth.
All right, Mr. Kajaria, that's as far as the volume growth is concerned. If you could throw some light on the margins, because earlier you had said they would be upwards of 16%. But from then on, I believe the gas prices have come down a little bit. So what is the margin outlook for the remainder of this year and the next year?
See, at the fourth quarter, we are looking at about 16%, what we said earlier at the end of the second quarter, that 6 months will be close to 16%. Plus, which we are hoping to maintain it, because third quarter has been 15.9%. I think looking at the fourth quarter, we should do 16% plus. But as far as the new year is 1920 is concerned, it will very much depend on how the Brent moves on. And the volume growth is positive. Things should be positive, but as far as the margins are concerned, I would say we will keep Brent or gas prices in mind. So exact number we will be able to say at this moment. But definitely it will be on the positive trend.
Well, Mr. Kajaria, I wanted to ask you about your fuel mix. Gas prices, yes, they've come in lower. Sometime last year, you started using some coal as well, right? And Indonesia coal prices have come in lower. So break it up for us. How much of your fuel mix is gas? How much of it is coal? And where are you sourcing your coal from?
Currently, we are using gas for our Sikandrabad and Malutana plant. It was all on gas. Partly for kilns we are using gas, and for spray dryer we are using coal. The coal which we are using in spray dryer is from Indonesia, which is sourced from importers of coal, and it is an Indonesian coal.
What is the mix, sir?
The mix is 75% is 75% gas and 25% coal approximately.
All right. If you could tell us some more in terms of your coal prices, because, you know, we're reading that there has been a cut by 9% in this month. Next month also expected to be about 8 to 10% cut in terms of gas prices. I'm sorry. Does that not make you increase your margins going forward?
The gas prices have not come down. Whatever you're saying, the gas prices have not come down so much. Gas prices have marginally come down, but not so much, because basically they take a 3-month average for the Brent. So from March it should start coming down. It has not come down much in January, and will come down much in January and also in February. From March it should come down. It should come down, and definitely it will have an impact on our margins going forward.
Mr. Kajaria, if you could also tell us, you know, how the situation in Morbi is right now, because we spoke to a lot of analysts and their channel checks indicate that in Morbi, the current players, the unorganized players, are facing some pressures. Is there a case for you gaining market share from there?
See, I was in Morbi for the last 2 days. When you contacted me for an interview, I was in Morbi on Monday.
Okay, so you will tell us the
Morbi is proper ground. They are operating at about 50-55% the capacity. They are trying their best to come under GST. Still, there are flaws. They have not been fully able to come under GST. But as you are aware, also the last year industry was on negative. This year the industry is flat. But we hope that going forward, the industry should also go at 7 to 8% from 1920.
All right, let's talk about a smaller part of your business.
There's too much excess. There is too much. Just to tell you, there is too much excess capacity in Morbi presently.
Let's talk about a smaller part of your business before we wind down this interview, Mr. Kajaria. How much of your revenues are coming in from the bathware segment? I'm aware last year you did around 155 crores. You had guided for a 40% growth. Year to date, what has been the growth? And as a percentage of your total revenue mix, where do you see this segment going to?
See, as we projected 40% growth last year, you will be happy to know first 9 months we have grown at 41%, and we should end the year close at 40% plus. As far as the revenue is concerned, this year it should be about 215 to 220 crores, and it should be about 7.5% of Kajaria's turnover, overall turnover. And going forward, we are looking at about the same percentage, because if tile industry grows at 14 to 15%, and this grows at about 30 to 40% going forward, this will remain at about 7-8% of the total turnover.
All right, and what about the operational performance out there? Is it making profits? By when does it break even? What margins does it function at? And finally, your loss-making joint ventures, what's the update there?
You will be happy to know the first quarter of this year, the JVs lost about 4 crores. Second quarter, they lost about 1.29 crores. Third quarter, they have made a profit of 1.88 crores. So going forward, the JVs are on a positive trend.
Okay, all right, Mr. Kajaria,
we have whatever decisions we had to take, we have corrected it, and it was on a positive trend.
Well, Mr. Kajaria, you mentioned numerous times that we'll be happy to know. We are happy to have you on the channel. It's always a pleasure talking to you. And I'm sure, going by your encouraging commentary, your investors will be very, very happy to know all that you said. Thanks so much for joining in, sir. All the best for the fourth quarter of this year.
Thank you, sir.
All right, let's move on then. Insurance companies like ICICI Pru and HDFC Life, they are under some pressure in trade today on the back of their Q3 results. Abhishek is with us in the studio to run us through all those details. Abhishek.
Well, Nigel, to begin with, HDFC Life's number were better than ICICI Pru. So in terms of the top line growth, the gross written premium has grown about 27% YOY, and they have declined by 2% quarter on quarter. However, there is a beat in new business premium growth, which is at 37% plus. The value of new business margin declined by 50 basis point quarter on quarter to about 24%. And the persistency ratio in the 61st month bucket actually declined by close to 335 basis points. CLSA maintains their buy recommendation on the stock. They cut their value of new business, which is a key matrix, by 4 to 9% for FY20 and 21, and they reduced the target price to 475 from 510. MK has downgraded the stock to accumulate and cut the target price to 450 from 465. Coming on to ICICI Pru, it is a top to down miss, much higher than the expectations. So gross written premium was up 10.5% YOY, but it was down 1.5% quarter on quarter. The income over there was largely driven by the insurance business, and the value of new business margin declined 50 basis point quarter on quarter, and the 13-month persistency ratio has also declined. Given that fact, brokerages have cut down their estimates. CLSA has cut down the target price to 430 from 450. Jefferies has downgraded the stock to underperform, target price at 285 from 350. MK has downgraded the stock to accumulate, target price reduced to 400 from 430, and Investec maintains buy but has cut the target price to 485 from 500. Back to you.
All right, Abhishek, thanks a lot for that. That is about the life insurance companies. In fact, ICICI Pru now down about 12%. Thank you for that. With that, we slip into a short break. Come back on the other side. We keep getting you an excerpt of our conversation with the president and CEO of HCL Tech on the sidelines of the Davos Summit.